Why is Monaco considered a tax haven? The fact that Monaco is a sovereign city-state and the second smallest nation in the world after Vatican City is something that not many people are aware of. The fact that French is the official language of the country certainly contributes to the widespread misunderstanding that it is a part of France. Due to its location in the Mediterranean close to Italy, it is just a few hours travel time from even the most important cities in Europe. The country has a stunning natural setting and a great quality of life, in addition to having excellent culture, academic, and medical services available to its citizens. In addition, residents of this sunny location take advantage of exceptionally advantageous tax rules, which is still another perk of living here. Because of its reputation as a tax haven, a great number of individuals have made the decision to make this principality their permanent residence. When compared to the rules and practices of many other countries, the United States' personal and company tax laws and regulations are considered to be comparatively lenient. In this video, we will discuss some of the financial benefits that come with making your home in Monaco. Personal income tax avoidance. Since the year 1869, Monaco has not subjected its people to a tax on their own income. To be deemed a resident, an individual must have the intention of remaining for more than 3 months every year. Because of Monaco's central position in Europe and its convenient accessibility by air, sea, and land, its citizens often go to other nations in the region for employment and even to make their permanent homes there. For instance, visitors from outside the country are permitted to remain in the United Kingdom for up to 3 months. There are a lot of business individuals that live in Monaco who work in the United Kingdom but don't go over the 90-day restriction. Because of this, they are now subject to the tax rules of Monaco, which means that any money made in the United Kingdom is exempt from taxes in that nation. However, there is a catch to this. Several nations in Europe consider this to be a form of tax evasion and make efforts to prevent it. For instance, French citizens who live in Monaco are liable to French income taxes unless they became residents of Monaco before 1957. The exception to this rule is if they were born in Monaco. Privacy. The rules of Monaco pertaining to financial and professional secrecy are well known. This indicates that it maintains a high level of data privacy inside its financial system, including the presence of wealth management and bank accounts, as well as any information associated to such accounts, such as account balances and activity. In accordance with the Monaco Penal Code, a penalty will be imposed on the offender if they fail to adhere to certain requirements. However, keep in mind that Monaco has recently been striking transparency agreements with a number of other nations. In spite of this, the government has put safeguards in place to prevent the laundering of money and the funding of terrorist organizations. The first anti-money laundering AML statute was enacted in 1993, and subsequent versions of this law continue to be revised in response to changing worldwide standards. The country's Financial Action Task Force is responsible for keeping an eye on this conduct. Although it has a reputation for keeping its financial dealings secret, Monaco is making more attempts to enter into transparency agreements with other nations. Taxes on capital accumulation and wealth. When an investment is sold at a higher price than it was originally purchased for, this results in a gain on the investment known as capital gain. Realizing capital gains is possible on any form of asset, including stocks and other investments, amongst other things. Gains on investments are subject to taxation in the majority of nations, including the United States. But citizens of Monaco do not pay capital gains taxes. In a similar vein, Monaco does not impose any taxes on net wealth either. The net worth of an individual's assets, as determined by the current fair market value, are used to calculate wealth taxes. It is calculated by subtracting the taxpayer's obligations from their assets. This tax is also sometimes referred to as an equity tax or a capital tax. Residents of France, either now or formerly, are exempt from these regulations. There is a possibility that these people will be required to pay some kind of tax. Despite this, French residents who move their house or domicile to Monaco will have to pay the French net wealth tax on all of their assets, regardless of where they are located in the globe. Tax on real estate. The real estate market in Monaco is accessible to both locals and investors from outside the country. There are no limitations placed on the ownership of businesses or properties by foreign investors, and it is not difficult to purchase or lease property inside the nation. It is vital to keep in mind that obtaining residence in Monaco requires either purchasing or renting real estate at some point. If you want to become a resident, the laws stipulate that you have to own or rent a home for at least a year before you may apply. If you own property in Monaco, it is imperative that you be aware that the Principality does not impose any taxes on property ownership. However, this does not hold true for renting agreements. In point of fact, the tax on rental properties is equal to 1% of the yearly rent in addition to any additional fees that may apply. If you sell your property, you will be responsible for paying taxes on the profit. Any earnings made from the sale of real estate are subject to this tax in the amount of 33.3% of such profits. On the other hand, losses incurred from the sale of real estate may be carried forward for a period of up to 5 years in order to compensate for profits incurred from the sale of other assets. Taxation on businesses. Anyone who has the intention of running a company is required to submit an application for a permission beforehand. This covers everyone who plans to run a business, whether it be a corporation, trade, single proprietorship, or as a freelancer. Documentation is required to be submitted to the Welcome Office. The proprietor of the company is required to have a good professional reputation as well as the appropriate credentials, and they must also provide a business plan that demonstrates the promise of consistent commercial activity. The regulations that apply to businesses in this nation must also be understood by individuals. In Monaco, there is no tax on general company income of any kind. However, Monaco is party to a contract with France that imposes taxes on the income earned from some types of commercial operations. Companies are required to provide evidence that at least 75% of their revenues come from sales inside the country. Companies whose income from sources outside of Monaco total more than 25% are subject to a tax rate of 33.33%. Businesses that are conducted inside the Principality are subject to the application of several regulations. For example, dividend taxes on shares in local enterprises were removed from Monaco's tax code in 1963. Both the implementation of this legislation and the widespread availability of data privacy contributed significantly to an increase in the total amount of foreign investment in the Principality. If a company with its headquarters in Monaco generates income through the sale of licenses for intellectual property such as trademarks, patents, industrial techniques, or creative copyrights, such gains are subject to taxation. Other important things to know about Monaco's economy. How does Monaco bring in the cash? The Mediterranean climate and the presence of casinos both contribute to Monaco's status as a popular tourist destination. Because of this, a significant portion of the nation's economic success is tied to the tourist sector. In addition to this, it levies a value-added tax (VAT) of 20%, imposes stamp fees on papers, and levies a tax of 33.333% on firms whose earnings come from offshore sources more than 25% of the time. How much does it cost to actually live in Monaco? A single person will spend little more than $1,400 per month on their general cost of living in Monaco. This statistic does not take into account the cost of lodging and is almost 47% points greater than that of the United States. The average monthly rent for a one-bedroom apartment in the downtown area is around $5,500, whereas the same-sized unit outside of the city is just $3,600. The average monthly rent in Monaco is about 440% greater than the average monthly rent in the United States. Is the Principality of Monaco a tax haven? The Principality of Monaco includes Monte Carlo as one of its administrative areas. As a consequence of this, it is known as a tax haven due to the advantageous laws that exist there. To use just one example, personal income earned by residents is not subject to taxation. The region also has a tax system that is business-friendly since it only taxes income made by businesses that generate 25% or more of their profits from the sources outside of the country. They are assessed at the rate of 33.333% of the total cost. Because of its advantageous personal and corporate tax policies, Monaco has been known for a long time to be regarded a tax haven. Individuals in the nation are not subject to income tax, but in order for companies to avoid paying taxes on their earnings, they must generate at least 75% of those earnings inside the country. If you are considering relocating for any of these reasons, you are required to provide evidence that you have housing and that you are able to maintain your current standard of living. In addition, before making any significant changes in your life, you should make sure you have done all of the necessary research beforehand. Thank you for watching this video. Please don't forget to subscribe, comment, and turn on the notification bell. This is Learning Canteen.